Okay, so today we're going to talk about creating an income statement from the trial balance. So we know that the trial balance itself needs to go through the adjustment process first. So in order to create the financial statements, we need to have the adjusted trial balance. That will give us the best numbers for our income statement. So we see here the adjusted trial balance for DynaClean air purification systems. So this adjusted trial balance has all the numbers updated from transactions through the original trial balance, through adjustments, through all the postings until now. So these numbers we can go on. Okay? We can use these numbers to do our financial statements as we expect them to be as accurate as possible. Now, the first statement we want to create is the income statement. So here's the income statement for DynaClean air purification systems. And you notice that I color coded it, although of course you wouldn't see that in a real situation, but I thought it might be easier to kind of connect the statements this way. So you'll also notice that this is for the month ended December 31st, 2018. Income statements always measure activity over a period of time because they're trying to measure whether the company's profitable. Normally it's a year, but in this case it's a month. So what goes on an income statement? Well, revenues are first. So we're going to type in revenues. And that's going to be a heading. And we only have one revenue. We have the service revenue. So we're going to put that right below it. And we should indent that a little bit. Okay, now you'll notice that there are two columns here. Okay, the reason why the widths are different is just to accommodate the other statements. Normally they would be the same. This column on the left, this is called the addition column. So if we have multiple items that we need to add together or do calculations, we would put them over here. And then we would put all the totals over here on the right column, which is the total column. Since we only have one revenue item, we'll put that in the total column. We have service revenue for $17,100. Now we have the expenses, right? Because on an income statement, we have revenue and expenses. We're trying to determine whether the company has net income or net loss for the period that we're measuring. Okay? If revenues are higher than net income, if revenues are higher than expenses, we have net income. If they're lower, we have net loss. So our next step is to put expenses. We can skip a line if we want to. We don't have to. I usually do to make it neater. And then all of our expenses are right here. Salary expense, depreciation, etc. So we could just copy and paste these over here. Okay, and again, we should indent those a little bit. So okay, we're going to list these now in the addition column because we have multiple items. So for salary expense, we have $4,100. Rent expense, we have $2,300. Depreciation expense, we have $500. Advertising expense, we have $2,400. And supplies expense, we have $400. And then what we're going to do is we're going to total our expenses. And that's going to go over here, okay, in the total column. So we should put a thick bottom border under here to indicate we're adding. Okay, and then we're going to go over to this column, to the total column, and we're going to add up our expenses, and we can do that using the sum. So we have expenses of $9,700, so we have net income. Our revenue exceeds our expenses, so we know we have net income. So this company was profitable for the month of December. And we can figure out the net income by simply taking the revenue minus the expenses. So they have a net income of $7,400. We should also put a thick bottom border there. So that's the income statement for Dynaclean air purification systems for the month of December of 2018. Now, statements tell us a lot, but they don't tell us everything. Sometimes financial people and lenders and investors like to have a quick reference on how a company is doing. And they can do that through financial statement ratios. And there are hundreds of financial statement ratios. What we're going to do here is just one of them, the profit margin ratio. And we're going to take the net income over the service revenue. Okay? And that's going to tell us, out of every dollar in revenue this company earned, what did they get to keep? So if we take the $7,400, the net income, and we divide that by service revenue, okay, we come up with 43%. So out of every dollar this company earns in income or revenue, it gets to keep 43 cents. Now, we don't know if that's good or bad just by looking at this. It looks pretty good, but we would have to compare it to other companies in the industry, to our own history as a company, and make sure that it's consistent. If it's higher than normal, that's great. If it's lower, we want to know that as well. So ratios are very important to financial statements, and they help us analyze them and dig a little deeper. So in the next video, we'll do the statement of owner's equity. Thank you for your attention.